Hey everybody, hello, good morning. This is me, Darius Anucauskas from Markets.com, and this is a quick video preview for the webinar, which is going to happen in a few moments. We have a relatively busy week. I already mentioned that on Monday, but today we have the BoC, the Bank of Canada, is coming out with their interest rate decision. And also we're keeping a close eye on tomorrow's interest rate decision by the ECB. A lot to look into. Markets are moving. Gold is crazy. We'll pick up on that as well. But look, stick around. Hopefully you'll enjoy the session, and I'll see you in a bit. Alright, ladies and gentlemen, hello, good morning, everyone. My name is Darius Anucauskas, and I'm the Global Market Analyst here at Markets.com. So, today is Wednesday, and today is the 16th of April, 2025. So, I hope you're all having a wonderful midweek. Just in general, hopefully you're having a wonderful midweek, Monday and Tuesday have been somewhat of an interesting ones, I would say. I mean, maybe a little bit on the quieter side than last week, but nevertheless, I think that the markets are still interesting because we do have some important data sets coming out. So we'll dig into all that in a little bit more just in a bit. Before that, I need to quickly have a read through our risk disclaimer. The content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere, just going to hang around here. I need to put the usual good morning in the chat room. Good morning, everyone. Yep. Just a sec. Good morning, everyone. So, right. Okay, there we go. Right. Look, also just before we jump into the charts, as always, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at what's happening with the Japanese Nikkei 225 here. And yes, we are seeing a little bit of a retracement, but in general, I think we had a good run here. We got a good push to the upside. I think that I'll stick to my game plan in a way. I'm not really going to stick with, say anything else. Basically, my upside scenario here is on a push back above the 35,111 territory, but even then, there are some limitations to the upside because we have this downside line taken from the high of the 24th of January. So if this line continues to provide resistance, then we could see another decline. However, at the moment, am I looking at some bearish scenarios? Yes, as well, but I think that maybe, just maybe, we could keep an eye on that bearishness, maybe from around 32,687 territory, somewhere around here. It did act as a good area of support previously, but okay, it got violated a few times. So yeah, I would say it's not the most important level. I think the more important level is still for me the 30,374 territory right here, marked by the lowest point of August of 2024. So if we can clear that one, I think the forthcoming lower low will be confirmed, potentially attracting more sellers into the game. Now, jumping into China very quickly. Oh, by the way, in terms of economic data from Japan, look, we have the trade balance coming out tomorrow, and everybody's watching that carefully because, look, the previous one was in positive territory for, it hasn't been the case for some time. The expectation is for the trade balance to remain in positive territory, but of course, we'll keep a close eye on that one. If it drops below zero, I think that Nikkei could drift a little bit lower here. In terms of Friday, what's happening Friday, the inflation number. So on Friday, just to let you know that there won't be a MarketsTalk webinar due to Good Friday, and on Monday as well due to Easter. I will resume on Wednesday with the live MarketsTalk webinar. But on Friday, Japan releases its core year-on-year inflation number together with the headline inflation number. So the core one is expected to come out a little bit on the higher side. Let's see what's going to happen with the year-on-year. At the moment here, I don't have an expectation, but let's see what's going to happen with the year-on-year. If it comes out higher than 3.7, if it does, then this is kind of putting in the BOJ in a spot where, you know, they can agree on excuse me, they can agree on potentially going with some rate hikes later on. But again, that's what they wanted, and if we see, like I said, if we see inflation here rising, then this kind of puts one step closer to another rate hike from the BOJ. But of course, we'll have to wait and see for now. China 50, let's have a look at this one. This one is pushing higher. So far, so good. I think that the fact that there has been a pause on tariffs, on some of the tariffs on China, then, you know, that's the market is playing out nicely here. And in general, I think that the Chinese economy, and I said it before and I'll say it again, the Chinese economy seems to be a little bit more resilient and a little bit more attractive actually to even the foreign investors. Because again, this uncertainty with protectionism in the US, it's kind of like shifting the investor world a little bit towards China. Again, let's see how that's going to play out. But for now, we're seeing the results. We're seeing that, yes, those moves, and we're seeing here a nice move to the upside. However, I'm not, from the technical perspective, I'm not really getting way too comfortable with the upside yet, because again, I need a clearance of all my EMAs here on the daily chart. Oh, apologies for my voice is going down a little bit. Need a little bit of tea. So, ladies and gentlemen, oh, apologies for that. Dow Jones Industrial Average, let's have a look at this one. So yesterday, the Dow was a little bit on the lower side. Yesterday, all major indices yesterday closed in negative territory. Not significantly, but just yeah, fractionally. So we saw this little decline. However, looking at this from the technical perspective, there is still a hope, there is still a chance for this one to rebound and push higher, because look, we are remaining above the psychological 40,000 zone, and that's the key one here. I talked about this on Monday. I said that, look, if we do continue to trade above the above that 40,000 zone, I'm leaning a little bit more towards the upside. However, the upside scenario is a little bit, or could be limited, due to the fact that we're still trading below this downside line taken from the high of the 20th of February. So long story short, if you're looking for some higher levels, then yes, there is a good chance to go and test the upside here. But I think that, yes, the upside, like I said, could be limited. And another thing is that something that probably we might kind of sometimes miss out on is look at the EMAs. Yes, I do constantly say that, you know, whenever we clear the EMAs, you know, like, or to the upside or to the downside, then I become bullish or bearish respectively. But in this case, let's not forget also about the crossings of the EMAs. So on my chart here, I have the 50 and I have the 100 and I have the 200-day EMA. So green, blue, and white line respectively. You can see that the 50-day EMA is now crossing the 200-day EMA. And to be honest, that doesn't happen very often. And in fact, looking at this chart, last time something like this happened was back in October of 2023. Yes, we had a great decline. But then look at this. I mean, it stabilized and it pushed higher again. Is that going to be the case again? I don't know. But look, I mean, I think that we had quite a prolonged rally where the EMAs, the shorter EMAs, were not crossing the longer EMAs. And like, for example, if we take the same scenario here back in October, at the end of October 2023, then you'll see that previously we're kind of very close. The 50-day EMA was very close to the 100 and the 200-day EMA, and but then kind of, yeah, and then we crossed, and then it kind of popped higher here, and then it was, like I said, a very prolonged rally. Now, now what we're getting here is kind of a first possible signal that maybe, just maybe, we could see, some sort of a reversal. I talked about this, and if you remember, if you watched my sessions previously, I talked about this idea that in general, yes, we're getting a nice strong reversal right now. However, is this going to be something like long term? I think that the trust has been shaken. I think that the markets now are going to be jumping into something else, and like I said, or maybe even other indices. And this is where the point where Dow Jones Industrial Average in a way could still suffer. So yes, I'm considering maybe a little bit of a push back up here. But again, as I said, the upside is limited unless we start clearing all the EMAs here, and then yes, then I will consider some higher areas. But at this point, I'm just observing the price action. The S&P 500. The S&P 500 is an interesting one here as well, and yep. Can I say? What can I say? It's it's a little bit more bearish than the Dow Jones Industrial Average, but of course we're considering all options. And looking at this here, I mean, at the moment, yes, we're seeing a little bit of a retracement. Look, we didn't really test the downside line as I really kind of was planning. So maybe we still could see some upside. We could see this downside line getting tested. Maybe so it should be drawn this way here. So maybe it could provide a bit of resistance, and then we could see a drift lower. But let's face it, for now, I am, like I said, I'm cautiously bullish, but only up until this downside line, and then I'm going to take it from there. Because let's not forget, the 50-day EMA has crossed the 200-day EMA here on the daily chart on the S&P 500 as well. US NASDAQ 100. So yes. Again, similar story. Basically, it's all kind of the same thing here. The 50 crossing the 200, this downside line. So yes, in a way, everything's pointing a little bit more towards the downside. But on this one, I'll get a little bit more bearish earlier if we do start seeing this one falling and staying below the 18,300 zone. And then we'll take it from there. In terms of economic data today from the US. By the way, GDP growth from China came out, 5.4, the same as previous. Interesting. Industrial production increased. Retail sales increased. Wow, good numbers. Good numbers from China. Employment rates better than previous. Okay, wonderful. Right, so retail sales numbers today from the US. Currently, the expectation for month-on-month is 1.3. However, I'm not seeing a expectation for the year-on-year number. So in that case, let me just check my other sources. Retail sales year-on-year is expected to decline. Okay, that's interesting. So roughly from 3.1, or should I say from 3.1 to roughly 2.6 actually. Okay, that's going to be interesting to watch. If that's the case, then this could, add up to the this bearishness of some of these indices, and then we'll have to go from there. So long story short, for now, I am cautiously bullish while we remain above the 18,300 zone. If we drop below that and stay below that, I'm going to lean a little bit more towards lower levels. Coming back to the economic data, look. Industrial production is coming out today as well, so we're keeping a close eye on that one. Tomorrow, we are getting the initial and continuous jobless claims together with the Philadelphia Fed Manufacturing Index, so we'll keep a close eye on that one. Yeah, and that one's expected to decline Friday. It's Good Friday, so the market will be closed. So today and tomorrow is the last trading days for in this week for the US. So we'll keep a close eye on that. Let's jump into the dollar index. Let's have a look at this one. So yes, we're looking at all that data, and in a way, we're trying to find some sort of positivity, but in a way that I think that at this point is really difficult for for the US dollar. And I said before, and I'll say it again. Look, my target was 100. We reached it. Now we're balancing around this 99.24 territory, as you can see here. That's the lowest point of July of 2023. So if we do drop and stay below it, I'm gonna go further south. That's what I'm gonna do. So that's my scenario, and we'll go from there. So yeah, so that's, like I said, that's the situation with the US dollar. Unless it starts popping back above this upside line taken from the lowest point of July of 2023, then yes, I will consider a larger kind of correction to the upside. Let's jump into the German index DAX, and yeah, look, the German index is on this kind of, it's closed here right now. So I mean, for some reason, yeah, just a second. Where is that? Why is it not moving? Interesting. Frankfurt. Yeah, it should be open. I mean, it's for some reason. Let me just. These are unfortunately not really working here. The other ones, Germany 40. Yeah, unfortunately, our is not working properly right now. We're trying to fix that. We've noticed that there are some issues. Yeah, this one is the case. So look, what I can say here is that actually, you know what? I think this is actually a good chart in a way, because it's not less movement right now, and we're just seeing how it is. So if we do push and we do stay above the 21,300 territory right there, my next target is the 50-day EMA. So this is the 100-day EMA. So if we clear that one, I'm going to go for that 50-day, and then we'll take it from there. I'm going to go slowly, step by step on this one, because I really don't want to rush into anything. So yeah, it's like I said, it's the some of these barriers that, of course, that we're going to be keeping a close eye on. Who messed up this? Yeah, somebody messed it up here. Let me just, yeah. So 22,226 territory, that's what I'm going to be aiming for initially. It's not exactly the level, it's actually more of the area around that level. Yep, for now, it's if we do climb back above this area somehow, then we're going to be back in this little range where we were previously. But at the moment, yes, we're trying to figure out what's going to happen here. Looking at the Fibonacci, let me just see from this all-time high to the lowest point of the current lowest point of April. We can see that we've done about 50% now retracement, so that's good. Maybe we're going to go for that 61.8. I think that's good. That's a good target. Let's see what's going to happen next. But for now, for that upside, I need to see a push above the 100-day EMA. Let's jump into the FTSE 100, ladies and gentlemen. So yes, I'm considering this still. I think I'm going to stick to that for now. And as long as we stay below the 200-day EMA, the downside scenario is not off the table. So let's see. For the upside, a break of this downside line is required. Let's have a look at some data that came out from the UK this morning. Let me just open up this. Oh, sorry, not was it yesterday? Today? Yeah, Wednesday. Yeah, today. So inflation numbers. So there we go. So we got the UK inflation numbers. The core dropped by 0.1%. It came out as expected. A year-on-year number came out as actually below the forecast and the previous at 2.6. So what we're seeing here is we're seeing some positivity. That's good. I'll jump into the pound in a bit. But for now, I think that could play out positively for this index. Let's jump into the Forex world now. And firstly, AUDUSD. So we reached my target. I talked about this idea where I said, look, if we do see a reversal back up here and, oh, excuse me. If we do see a reversal back up here, back above this, back to this upside line, the broken upside line, we could, if it provides good resistance, then we could see another drift lower. But if we clear it and we stay above it, I'll go for this downside line, which, as you can see, working out like a charm as well. So far so good. And my next target will be this, again, this downside line, but I would actually prefer now at this point to wait for a breakout, because we had a decent rally. We did the whole kind of V-shaped, reversal. And now I think maybe there could be a bit of time for a little bit of a retracement. Maybe the US dollar could, pick up some slack and kind of and just go back up a little. But again, let's not rush into things and let's continue observing the price action here. For now, like I said, if we do clear that downside line, the next target is the 200-day EMA. But if that gets cleared, then of course, yes, higher levels could be met. But at this point, I'm not excluding the possibility for a little bit of a stabilization moment here, which, where we could see a bit of a drift back down. AUDJPY is, it did push higher. It did kind of show us that risk on came back a little into the market, but is that going to be a temporary fix? Is this going to be a temporary moment? Well, looking at this, it seems like it could be. So from the very short-term perspective, I think that what we can do is we can keep an eye on this 91.85 territory. If we jump and stay above it, then I will aim for this downside line, which is taken from the highest point of July of 2024. And then we'll go from there. So that's going to be my game plan for now, but I prefer, like I said, I do like the downside scenario still, but for that I need to see the pair dropping and staying below the psychological 90 zone. NZD USD. Look at this. I mean, wow, this is just amazing. This is just spectacular, and it seems like there's no stopping for this one. And yeah, like for now, we remain above the 200-day EMA, and look what I'm going to do right now. My next target is going to be somewhere around here. Let me just bring the line here, somewhere around here near the 0.6037, something like around there. That's the high of the 7th of November, if I'm not mistaken, even the highest point of November of last year. So good potential target, but of course, don't get me wrong, I think a bit of retracement first and then going for that area, because we did have quite a decent up move here. I mean, look at this move from the lows. Let me just grab this one. Look at this. I talked about the 0.55 territory a while ago, if you remember. I said that this is going to be my target, and beautiful move, and then since then we just kind of rallied 7%. I mean, look, everything's I wouldn't say logical, but everything is really interesting right now in this period which we're going through. USDJPY, let's have a look at this one. This one continues to feel the heat, and it seems like we could go further south. 142.06, that's what I'm looking at. I talked about this hurdle. If we do clear that, my next target is the 139.57, and then we'll go from there. USDCAD is a nice and interesting move here. We're seeing a bit of retracement. Look, the BoC. Let's have a look at this one. So the BoC is not expected to do anything. They're expected to keep the rates unchanged. In a way, I think that their inflation is going to their target of 2%. It's getting closer there. So, what's the point of doing anything in general? I think that they think probably the economy is doing well, apart from the tariffs, but even those got delayed. So in a way, everybody's now trying to think that maybe those tariffs are just going to be some sort of a fear tool to kind of maybe negotiate some better deals or something like that. However, we know that market eventually kind of finds equilibrium in a way, and market eventually adjusts, and with those deals and everything, I think that for now it's going to be quite interesting. Those are I would say those external temporary shocks, but I think that the market will stabilize eventually and just go with the flow. But for now, looking at this picture, look, Bank of Canada is expected to keep the rate at plus 2.75. If we do deviate somehow from this, I mean, wow. Of course, if we do deviate to the downside, then the stock market could, see a nice good boost, but the Forex world could suffer a little bit. So what could happen here? The Canadian dollar could devalue. But again, if the number comes out on the lower side, I think that still this could push higher. I am aiming. I said to you, I talked about this yesterday. I'm aiming for that psychological 1.40 zone, and I talked about this in my one of my videos yesterday. So you can check out the our Markets.com page here as well. So just this is what I've posted like yesterday. So I think it's a good piece. So you can check out that one. Yeah, like I said, the 1.40 becomes quite an interesting target in my opinion, just because the way everything is shaping up. Just because again, the BoC is planning to keep the rates unchanged, and most likely they're not going to be considering any cuts soon, or sorry, even hikes soon. So that's what could weaken the Canadian dollar. But the Canadian dollar is kind of enjoying the weakness of the US dollar, and there is a little bit of a rebound in oil. So all kind of stars are aligning perfectly for them, without the need of the central bank intervention. US dollar against the Swiss franc. Yes, yesterday a nice little retracement back up here, but today everything is getting wiped out. All the gains from yesterday are getting wiped out. So way more downside here could come. EURUSD. Okay, look, with EURUSD, I would say this one is still positive, and I talked about this in one of my videos here yesterday, so you can check it out here. The latest one I covered it in detail, and basically what I just a kind of a short little summary that. For now, I mean, look, the ECB is expected to go and cut rates. So this could be a negative thing for the euro in a way. So that's what we're watching today. Even we have the inflation numbers as well, which are coming out. So the inflation number from the eurozone is expected to decline. So in a way, everything's kind of pointing more towards the downside. But at this point, I think that when the euro could move, it will be during the Lagarde press conference, and that's what you need to keep an eye on. The interest rate decision when it comes out, that's one thing, but the press conference, that's what we're looking for. That's what we're going to be keeping a close eye on. And yeah, for now, yeah, of course, it all kind of plays out in the bearish way for the euro. I'm still considering something of a larger correction back down a little bit, like something up until this downside line taken from the highest point of July of 2023, and then we'll go from there. So long story short, for now, I'm like I said, I'm seeing some positivity, but we're early in the European morning. We still have not gone through the US morning, so or general day. So that's why I'm just gonna still kind of say, you know what, there could be a bit of a retracement back down at some point. So let's see what's going to happen there. Now, very quickly on Euro Aussie, this one is stabilizing, it seems like that. But yeah, I mean, there could be some positivity. We're keeping an eye on the ECB for sure on this one. But look, for me in the short run, if we do clear this 1.7697, or in general 1.77 territory, if we clear that one, I'm going to lean a little bit more towards the downside. But then in terms of downside, let's not forget that we're trading above this upside line here, taken from the lowest point of February of this year. And then we'll go from there. Maybe we'll do something like, let me just drop this one very quickly here. Maybe we'll do something like this. So just keep a close eye on it. Let's jump into Euro GBP very quickly. I don't like this pair, but hey, I still look at it. So it does have a mind of its own. So I say I'm still somewhat positive on this one. Yes, we could see some retracement but again, I would strongly recommend not to touch this pair because in general, don't touch anything euro related, probably up until you see the CPIs coming out, and then then you can do something about it, but only if you're comfortable with. GBPUSD, so let's have a look. So yes, pushing nicely to the upside, purely on the weakness of the US dollar, because the British inflation should be seen as a negative a little bit for the British pound. But as you can see, nobody cares. It just continues to rally. My target has been reached here a while ago. I said to you that if we do pop back above the 1.3014, I'm going to go for that 1.32 zone, and then we see. For now, what I'm going to do here is I'm going to aim for the highest point of September of 2024 near the 1.3434. But of course, in between that move here to the upside, I think that there could be a little bit of a retracement back down. In terms of from where, I think maybe this could be the little zone. The 1.3312, I'm keeping a close eye on this one, because if we do reach this area and then we stall, maybe a bit of retracement could be possible, and then we'll like I said, I'll consider a move higher, unless not unless, but as long as we stay above the 1.32 zone. If we start falling below it, I'm leaning a little bit more towards the downside. Let's jump into Swiss franc against the Japanese yen. Still nice retracement here. Everything is fine, so it seems like the Swiss franc could have the upper hand. And now gold. I mean, this is just insane. 3,300, are we getting there or what? Like, I mean, honestly, we came very close this morning to testing that 3,300. Oh my God, this is just amazing. This is just spectacular, and I don't know where this is going to stop. And this is where I apply my beloved Fibonacci. And if you watched my videos previously, and you probably looked at, when we looked at Fibonacci extensions here, I have drawn it in several ways. So for example, I think it's maybe easier on a weekly. Let me just double check which way was easier. Yeah, let's say we'll use the monthly. Just we'll change that, but for now, we'll use it this way. So yeah, this is drawn from the lowest point of October of 2023 to the highest point of October of 2024 to the lowest point of November of 2024, and that's the result we're getting. 3,306.7-ish. That's the next target we could be aiming for. If we do draw it this way, then we are overshooting, so this doesn't make any sense. So yeah, I mean, this like I said, that other one starts making a little more sense, because it seems like we're approaching that one. But if we look at the daily chart, so then if we do draw it from here, let's say from the lowest point of November to and like I said, this is where the problem arises, then it becomes quite subjective. So we do draw it this way, that way, sorry, not this way, but this way. So you'll see that maybe the 3,350 territory could be nice, but that's a little bit misleading, I would say. So this really, I would draw it from here. So at least this is from the low of 28th of February, not the lowest, but the low of 28th of February, drawn to the high of the 3rd of April, and then to the low of 7th of April. And of course, we can look at it from this perspective. I mean, then we'll see that we've kind of overshot that area already. So again, it's really subjective the way you draw the Fibonacci extension. Maybe this way is going to work. So again, it's really subjective. That's why I do actually like the monthly chart here, and you can see why. I mean, if we do draw it this way, which basically kind of it gives a little bit more sense in my opinion, then you'll see that we are approaching fast this 78.6, and this kind of becomes the most realistic, I would say, area where a little holdup could happen. But in general, look at this monthly candle, and look in general the way it's pushing higher. Look, gold is bullish. Yes, it is, and people do tend to jump into it when the times go bad. But that's what I'm saying. I think that we remember the recent activity. So gold started selling off when the stock market started selling off, and then in the beginning of April, and everybody was like, why gold is not pushing higher? It's just dropping with the stock market together. And what I was saying in my videos, I was saying, look, everybody's buying gold when everything is good. because once it, and the biggest purchasers of gold, of course, are countries, rich countries, and or countries that have the means. So and this is where, like I said, this is where now, uh, if we do start seeing some sort of big problems, and again in the economy, again maybe resumption of the tariff talks, this is where people this is where countries might start selling gold just because they need cash. They need cash to support the economy later on. So that's why we're ramping up on all our gold reserves at this point. Gold goes higher together with the stock market. But then, the stock market turns sour and everybody's like jumping off, selling gold because it's at the highs. And it's basically, oh, almost dropped my microphone. And like I said, then everybody started selling gold because again, they need cash. They need to support. They need the means to support their country. They're not going to give you gold bars. No, they will need to give you cash. So that's what I'm saying. So let's say at this point, gold is rallying, but once we start seeing some sort of a strong reversal in the stock market, I think gold could reverse course as well. But for now, it's just one-way traffic, and I mean 3,300. Here we come, right? Let's see. Silver. Silver is always also pushing higher, but a little bit on the modest side, but so far so good. I talked about this on Monday. I said that if we do pop and stay above this upside line, my next target is the 33.42 zone. Copper, jumping into copper, and yes, a little bit oscillating here around this upside line, which no longer is needed, but we're basically stuck in between these EMAs. So look, I need to see a push above the 50-day EMA in order to go higher, and then we'll go from there. For the downside, I would prefer to wait for a drop below the 200-day EMA, and then we can go from there. Let's jump into oil. Oil, I talked about this, and I'll stick to my words. I'm still bearish in oil, especially if we continue to trade below the 65 territories. So yeah, if we can continue to trade below that, I'm gonna stick to my downside scenario. At the moment, we're coiling up, so it's not really the most interesting one for me. But again, I'm somewhat bearish still on oil. We could see occasional pops here, but as I said, as long as we stay below the $65 mark, I'm leaning still towards the downside. Natural gas, very good move here, testing the 200-day EMA and even clearing it. So I do believe that this commodity could find support later on, but at this point, it's not really feeling great, and I think that, look, it still has plenty of room. If we do draw it this way, then we still have plenty of room to the downside. But for that, we need to continue trading below the 200-day EMA. Coffee, pushing back up, but I'm not getting positive with this one yet because we'd found good resistance near the 50-day EMA. If we can clear that and stay above that, I'll go a little bit higher. Sugar, very quickly. Sugar, yes, there we go. We reached my target. We cleared this upside line, and 17.50 zone, we've reached that one. Let's see if we can clear that one. We are at a historic moment, and I think that there could be some more downside to come. Let me just draw it this way. So there could be more downside to come, but we're aiming for the 17.19 zone. But again, let's not rush into things. Yeah, oh, by the way, let me just highlight this area for our future reference. I think that this makes a lot of sense. I think that this is a good area, and let me just right. So that's what I'm going to keep an eye on. I do like it. Like I said, let's see if we can clear it. And let's jump into the crypto world for dessert, ladies and gentlemen. Bitcoin. So, okay, drifting back down, but still somewhat positive. But as I said before, I need to see a push above the 88 zone here, 88,700 territory. If we can get that move, amazing. I'll go higher. I'm not bearish because, again, I needed at least a drop back below the 200-day EMA, and then we'll go from there. Bitcoin Cash, I do like this one. After a beautiful rally here, we tested the 50-day EMA, the 200-day EMA near the 370 zone here, and then we started drifting lower. Now we're below all my EMAs on the on the daily chart. Ethereum, let's have a look at this one. Again, flirting with that 1,500 zone. Let's see if we can clear that one. Ripple also retracing back down. And yep, look, I'm not saying that I'm bearish, but there is an element of fear a little bit here. But look, as long as we stay above the 1.90 territory somewhere here, I think that there could be it could still be a chance for this one to move higher. Litecoin, another one of my favorite ones. For this one, I need to see a break of this downside line, which is very tentative because, again, it depends on how you draw it. But you know what? I think that the better option here is just to wait for a pop above, at least above the $80 mark here, and we can go from there. Dogecoin drifting lower, so but I'll get more comfortable with the downside on this one if we do fall below the 0.1416 zone. And finally, not finally, but Polkadot is drifting lower to the downside here, and so far, if we do somehow stay above the 3.57, then I will consider a move higher. But at this point, it's a little bit bearish. And Tron, after a good result here, testing this 0.2570 territory, it's finally finding a strong area of resistance. So if we do clear that area and we stay above it, I'm going to lean towards the upside. I'm going to aim higher, and then we'll go from there. So, ladies and gentlemen, that's it. That was a very quick session. I tried to keep it short and simple. Again, I didn't want to overcrowd with information because, again, there's a lot of instruments to cover, and like I said, this time I tried to keep everything compact. But for more information about certain events, you can always find videos on our YouTube channel here as always, and also our TradingView channel here, and you can check out these different analysis on different topics which I believe are relevant, and yeah, you can kind of utilize those if you like, in general, ladies and gentlemen, thank you very much. Thank you very much for watching and listening. I really appreciate your time. So just again, a quick reminder that there won't be a session on Friday, not tomorrow, sorry, on Friday. There won't be a session on Friday, and on Monday. I will resume on Wednesday with the Markets Talk show, and we're going to talk markets. So yeah, let's see how this is going to play out. But as always, ladies and gentlemen, have a great great period of holiday, the great holiday period. There we go. Have a great time. So enjoy it. If you are celebrating this, of course, enjoy it. And as always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you next Wednesday. Bye bye.